all of you are aware of the FICA changes that have happened. So in other words, the changes to the FIC Act. These changes in terms of the FIC Act are almost to a point not a tax problem, in the sense that they're required you to register with the Financial Intelligence Center. They require you to provide certain disclosure. They require you to report certain transactions, which we are not required to do as tax practitioners. However, having said that, we would really be remiss as tax practitioners, and also for that matter, in our own capacities as tax professionals, in being unaware of these changes and these reporting requirements. To my mind, I did discuss this in a bit more detail, and also in most professional bodies, there has been training, in most RCBs, not professional bodies, there's been training that's been provided on this, but we really need to emphasize that to our clients. If you're a legal practitioner, you are now an accountable institution under FIC. If you're a co-op bank, if you are a credit provider, now this is also important again to mention, if you're a credit provider, even if you don't have to go and do reporting under the National Credit Act, if you just meet the definition of a national credit provider, you're in. Simple example, one of the current exemptions under the National Credit Act is any institute which lends money to a juristic person where the value of the lend is 2 million rand or more. Group companies scope out. In that case, even though you are not required to register, you are still a credit provider in terms of the definition. So it's a lot broader than a lot of people think. High value goods. Hello, any furniture store that sells big TVs. Hello, leather lounge suite salespersons. Hello, boardroom stores. Shops which sell mountain bikes. That 100,000 is broader than has historically been the case. Please make sure that you are recognizing which clients need to register. From our side as well, trust and company service providers, this is obviously a big concern. We need to ensure that we are all in line, that if we meet the definition of a trusted company service provider, that we can actually go and meet that definition. So in case you're worried and in case you're not quite sure where to go and look for additional information, please go and have a look at fic.gov.za. So that's the financial intelligence sector. They are the people who really enact, govern, control, manage. Manage is probably a good word. The new requirements that we are being subject to. Under information sources, under published, there is a reference guide for all accountable institutions. And this 25-page document is the FIC view in terms of who meets these definitions, who actually has to go and do the work corresponding to these definitions. But probably most important for us, in terms of all the different types of new accountable institutions, they also have additional public commentary documents dealing with their view of what does it mean to be a trust company service provider? What does it mean to be a high value goods dealer? Now, for most of us, we would probably be looking at being a trusted company service provider, what are the criteria and considerations that they've been looking at? Now, I'm not going to go through this in more detail because, again, said, and no, please note, as accountants, we are not financial services providers because we're not registered under the FSB. We would more than likely fall under trusted company service providers. So this is the criteria we'd have to look at. This is still draft. They had promised that by the middle of March-ish, they would have given us a new guidance, but clearly they haven't. So this is the best that we have to work with. It helps at the very least that when we start having conversations with our clients, that when we start thinking about this process internally for ourselves, that we can go and say, this is as close to the horse's mouth as we can get, because FIC is the regulator we are reporting to in terms of the FICA changes.